Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a Form 20F filing from METALINK, and let me tell you, it's a bit like finding a time capsule that's mostly filled with dust. What's inside? Well, the main takeaway is that METALINK is mostly not doing anything at the moment. This is their annual report, essentially a yearly checkup required by the SEC, the Securities and Exchange Commission, for companies listed on US stock exchanges. Even if they are from outside the US, it gives investors an overview of how the company performed over the past year, including its financials, strategy, and potential risks. This report covers the year ending December 31, 2024, so it's pretty up to date. Now, before we get too far in, it's important to note that METALINK considers itself a shell company. This means they don't have many active business operations of their own. Instead, they're on the lookout for a business to acquire or merge with, a reverse merger, if you will. The report confirms that METALINK is indeed a shell company. Basically, they are in search of something to do. Let's check how their financials are. As you might expect, revenues were zero for both 2024 and 2023. So where is the story to be found in this report? Well, it's in how they are managing their money while waiting for an opportunity. Let's look at their operating expenses. General and administrative expenses were about $39,000 in 2024, only slightly up from $38,000 the previous year. Most of this is fixed costs required to keep the company alive. The company has to keep the books, file these reports, make sure it's financially healthy. Now, here's where it gets a little more interesting. They had about $117,000 in net financial income for the year. Where is this money coming from? Well, it is from interest income, exchange rate differences, and balance annulments. Basically, they're making money off the cash they have in the bank, as well as taking advantage of financial quirks. Looking at the balance sheets, we can see that METALINK's assets are mostly in cash and short-term bank deposits. In fact, they had almost $2 million in the bank as of the end of last year, but they need to be careful. It appears METALINK is walking a tightrope because the company might accidentally become what's called an investment company, have all kind of additional regulatory oversight and requirements that they would prefer to avoid. They might be forced to spend or invest their cash just to avoid this regulatory headache. In any case, they are aware of the problem. They seem to be investing most of the cash in short-term dollar deposits. So they are aware that cash will lose value in an inflationary environment. Turning to the statement of cash flows, we can confirm that they're spending very little to keep the business running. Net cash used in operating activities was about $22,000. On the flip side, the company made $42,000 from investing. There is a small income from leaving the money in the bank. The result is that the METALINK made almost $80,000 last year. These numbers can be seen in the statement of changes in shareholders' equity. Now, this is not a normal risk, but METALINK is an Israeli company, so we need to take this into consideration. The company acknowledges risks due to the state of war declared in Israel in 2023 and overall instability in the Middle East. Political and economic conditions could greatly harm the ability of METALINK to achieve its goals. There's a tax risk mentioned as well. It looks like there might be some tax trouble for US shareholders if the company is deemed a passive foreign investment company. Or PFIC, if METALINK gets this label, US shareholders may face some adverse tax consequences, like having gains taxed at higher rates. There is also a shareholder concentration risk. Daniel Magan, the CEO, effectively controls the company. This means he has significant power over company decisions. On the other hand, the report implies that Mr. Magan might sell a substantial number of his ordinary shares, and if he does that, the shares will fall. But is he selling? For a company that appears to be generating so little revenue, is it worth it for Mr. Magan to stay around as CEO? Well, he is not getting paid for the job. I suppose he has an incentive to keep the shares high. So what do we make of METALINK? Well, as it stands, it's a shell company with a decent amount of cash searching for something to do. Its value for now is really just a sum of cash that it has. If the cash gets spent or something adverse happens, then the company loses value. But is it all doom and gloom? Not really. It seems that the CEO has an incentive to get this done, but you always have to factor a large discount to these companies, the unknown unknown. Thanks for watching Corporate Decoder. If you found this breakdown helpful, hit that like button and subscribe for more deep dives into the world of corporate filings. And don't forget to leave a comment below letting me know what company I should decode next.